Hello everybody, welcome to today's fundamentals. Hello Peter.
Hello.
So we saw the US dollar rising yesterday, which was a bit unexpected.
Yeah, it was practically, I think that was the main market movement. We haven't seen such volatility, in my opinion, okay, with the exception of the US employment report on Friday, for the past 2 weeks or so. And what actually moved the US dollar and what actually supported the US dollar was the release of two practically financial releases. The first was the industrial orders growth rate of the US. It accelerated more than expected. It was at 0.3, expected to go to 0.7. It didn't, it went up to a full point. And that tended to imply that economic activity in the manufacturing sector of the US expanded at a faster pace. A little bit later, we also had the ISM non-manufacturing PMI figure, and it was expected to drop. It didn't. It rose and actually implied that economic activity in the services sector this time expanded also at a faster pace. So both indicators tend to imply that economic activity is rather healthy. And that would allow the Fed to remain rather hawkish. I wouldn't say that the market's expectations about the next rate hike, which is expected to be at around 50 basis points from the Fed on the 14th of December, they didn't change. But what did change was that everybody expected the Fed to ease. Now, if you take yesterday's readings in conjunction with the better than expected employment report for November on Friday, that tends to imply that the Fed will remain hawkish and even a little bit more aggressive. And that tended to support the US dollar.
Were there ripple effects also on US stock markets?
Yes, because should the Fed actually remain hawkish and aggressive, that could imply that more or less it's going to be tightening its monetary policy at a fast pace, continuing to tighten it, and that could have an adverse effect on growth factors. So practically we saw a negative reaction with all three main indexes of US stock markets, the Dow Jones, S&P 500, NASDAQ, all three of them tumbled and were in the reds. I think it's going to be also somewhat, I wouldn't say an overreaction, but it was characteristic that some optimism, which we saw coming practically on Friday from the release of the US employment report, actually after the release, which US stock markets rebounded, that sent them into the negatives once again.
And how about gold's price?
Now, gold's price definitely weakened because of the negative correlation of the precious metals price with the US dollar. I would say though that also the rise of US yields, it was characteristic that we had the 10-year yield rising, if I'm correct, to 3.6%, tended to more or less weaken gold's price even further. Because we have to understand here that both US bonds as well as gold are considered to be kinds of safe havens, safe investments, and they are just a bit antagonistic between each other. So should the yields of US bonds be on the rise, given that gold has no yields, is not interest bearing, then we may see a shift from gold towards bonds. And that's what happened yesterday, practically weakening gold's price even further.
And what's new in the oil market?
We had a wide drop of WTI's price. It was around $3 to $4. Now there are a number of factors, fundamental factors, which still suggest that oil prices could rise further, and they actually corrected higher during today's Asian session. But I think that the market given the intensification of its expectations for the Fed to remain hawkish and aggressive, priced in also the possibility that there will be weaker demand from the US, and that tended to weaken oil's price. I would note though that we had also a number of headlines which tended to create some ambiguity about the possibility of Asia's demand also dropping. It was characteristic that the Saudis lowered the price of oil for the Asian market, which is their key market, while on Friday we had some comments by Kuwait where practically Kuwait stated that there seems to be some hesitancy from Asian markets to increase imports of oil in the coming year. So there was a little bit of uncertainty about the demand side of oil. On the other hand, I would be noting that Reuters has reported that oil tankers are queuing at Turkish shore, and the main reason is the banning of Russian oil in Europe, which means they cannot unload. And that's an indicative matter, which derives exactly from the banning of oil of the EU.
Mm-hmm. And back in the FX market, was an RBA's interest rate decision due out in today's Asian session?
Yep. We had RBA's interest rate decision. The bank, as was expected, I wouldn't say widely expected, but still expected. We had mentioned it also yesterday. Now, the bank hiked rates by 25 basis points. The interesting part was in Governor Lowe's accompanying statement. Governor Lowe stated that inflationary pressures, actually inflation is too high, and he actually expects inflation to rise even further. More or less, the accompanying statement underscored the bank's determination to curb inflationary pressures in the Australian economy, and that in turn intensifies market expectations that RBA is going to remain hawkish. More rate hikes are to come. Provided some support for the Aussie at the time of the release. Not much, but it was still evident that there was a market reaction there. I think that RBA's monetary policy is going to remain hawkish for the coming month at least, and that could provide some support for the Aussie over that period.
And what's in the calendar for today?
I would note in the American session today 2 releases. The first would be Canada's trade data. The trade surplus of Canada is expected to narrow just a bit and could weaken the CAD, as that would imply practically that the Canadian economy benefited less from its international trading activities. I would be also noting later, just before the Asian session starts, from the US, the AP weekly crude oil inventories figure. Now, the last reading was of a substantial drawdown of minus 7.6 million barrels. Should the new reading be another drawdown, even lower, but still a drawdown, that would imply that oil demand was not, if I'm allowed, let me rephrase that, oil supply was not able to catch up with demand, implying that there is a tight oil market in the US, which could provide some support for oil prices. During tomorrow's Asian session, I would be noting from Australia, actually I would be highlighting from Australia Australia's GDP rate. It's for Q3. An acceleration is expected, and it's a substantial one, and could provide some support for the Aussie here, as it shows that the Australian economy grew at a faster pace. And last but not least, in the Asian session tomorrow, we're getting China's trade data. The trade surplus is expected to narrow, which could weaken the Aussie, but I think that Aussie traders will be more focused on the import growth rate, which affects them more directly, as they export a high amount of raw materials to China. Now, the import growth rate is expected to contract even further. And if that's the case, we may see the Aussie weakening as that would imply practically that Australian exports of raw materials to China are expected to drop even further. Yeah, that's it.
Any final comments?
It's going to be interesting how the market's going to be opening, especially in the American session, because after the wide drop of US stock markets and the strengthening of the US dollar, should the market remain cautious, we may see that scenario being repeated. Should the market, on the other hand, have second thoughts, maybe consider that it was an overreaction, see the situation in a more optimistic light, that could provide some correction higher for the US stock markets, even support them, while US dollar may drop a little bit.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So, welcome to the technical analysis part of the presentation. My name is Peter Iosif, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index for our charts. By the way, all the charts which are to be presented are to be of the same time frame unless otherwise stated. Now, the US dollar practically strengthened, and that was clearly reflected also in the US dollar index as it rose. It reached the resistance line of 105.25, and it's like it hit the ceiling, which more or less stabilized the index. For the time being, we tend to maintain our bias for the sideways motion to continue, and I wouldn't be surprised to see it revolving around or just below the R1 for the time being. It's interesting also that the RSI indicator is also running along the reading of 50, implying a rather indecisive market for the US dollar. It will be interesting to see especially how the American session opens today. Should market worries intensify and provide fresh safe haven inflows for the USD, we may see the price action rising, breaking above clearly the 105.25 and test the 107.15 as the next possible target for the bulls. I would be highlighting here that we had this level tested once, twice, 3 times. So it's a pretty valid level. I wouldn't be underestimating it. On the flip side, though, there may be a correction lower, and that may provide the bears with the chance to actually take over the initiative over the index's direction. And in that case, we may see it dropping, breaking the 103.50, and start aiming for the 101.30. Okay. Let's have a look at Euro USD. There you go. Euro USD dropped from the highs of the 1.0605 resistance line to the lows of the 1.0485. It's clear how USD driven the pair currently is, as the pair in a reverse mode stabilized but lower than the US dollar index. So practically we see the case for the sideways motion to continue, Also in this case, the RSI indicator is pretty close to the reading of 50, also implying a rather sideways motion. But at the same time, note how the Bollinger Bands are converging, implying low volatility as marked for the past 16 hours. So we maintain a bias for sideways motion, possibly around or just above the S1 1.0485. Now, should the bears take over, we may see the price action dropping, breaking the S1, and start clearly aiming for the 1.0295 support level. That would be the S2, which was tested once here, twice here, and even here and here. So that's a pretty bad level as well. On the flip side, should the bulls take over once again, say for example the US dollar tends to weaken, then we may see the price action rising, Euro USD breaking the first resistance line, and that would be a prerequisite for a bullish outlook. Thus, should the 1.0605 resistance line be broken, then we set as the next level the 1.0785. Let's have a recheck on the validity of the R2. Let's see where it rests. Okay, the R2 was able to reverse the upward motion here, and that was on the 30th of May, while it was aimed for once again here at the 9th of June. So it was in general considered to be the upper boundary of the sideways motion end of May, beginning of June. Seems to be pretty valid, so I'm keeping that as well. Let's readjust. Once again, main scenario for the time being is the sideways motion to continue, especially given that the upward trend line of the pair was broken here. You can see it exactly here. That was earlier yesterday with the drop, actually in the American session yesterday, with the drop of the US dollar. Let's have a look now at GBP/USD table. In a similar fashion, cable dropped to remain just above the 1.2150 excuse me, support line. That would be the S1. Also note how the RSI indicator is also running along the reading of 50, implying a rather decisive market. So that tends to imply that the sideways motion is to continue, while as in the Euro USD pair, we see that the Bollinger Bands are converging, also implying low volatility for the pair. So we maintain a sideways motion practically just above or even around the 1.2150 level. Now, should the bulls take over, in case, for example, that the pound finds some support or the US dollar weakens, then we may see the pair rising. I would require a clear break of the 1.24 though for bullish outlook. So should the R1 be broken, that would pave the way for the 1.2660 resistance level. Once again, let's recheck the second resistance line, which was also reached at the last days of May. Once again, that would be from the 27th. You can see how it was tested extensively, and in general it had a sideways motion up until the 10th of June. So that's pretty valid. Let's have a look also at a possible bearish scenario. Now, should there be a selling interest of the market for cable, say for example pound weakens or the US dollar strengthens, then we may see the pair dropping. I would require a clear break of the 1.2150 support line, and the price action may start aiming for the 1.1940, even lower could be, given that the S2 level provided support numerous times, and that was just 1 or 2 weeks ago, from the 28th of November up until the 30th. So it's fresh, and it had multiple touches. It had also in the past multiple touches to the upside as well. So it has proven its worth as a valid level both to the upside as well as to the downside. So I'm keeping that as well. Once again, main base scenario for now is that cable is going to maintain a sideways motion, yet be aware of how the American session is going to be opening and what the effect will be on the US dollar. Moving now to USD/JPY, an interesting pair which has risen, has broken the 135.80, now turned to support. Let's change that. And while we're at it, let's also go hunting for a new ultimate resistance line, a new R3. I will be placing it here, this peak here. It's a beautiful peak, can't miss it. Let's lower it just a bit. There it is. And that's the 100 in red. Please, ladies and gentlemen, it's a resistance line. And that's the 142.20. Let's wind this. Let's correct also the labels once you add it. 131.50. Second support line being placed at 133.90. First support line at 135.80. $137.50, $139.65, and final resistance line now being placed at 142.20. Let's lock this in. Let's start commenting. Now the pair had an upward motion. Let's drill down to the 1 hour chart to see more accuracy. And the upward motion, ladies and gentlemen, has just been broken about 3 hours ago. It's interesting. Note how the pair was forming higher troughs and higher peaks. And that has stopped. The upward trend line has been broken. Hence, we switch our bullish outlook, excuse me, in favor of a sideways movement. Let's drill back to the 4-hour chart. Possibly between the 135.80 and the 137.50, with the resistance line being a Fortimer support line. You can see it here. But given that the price action has moved below it, has switched its role into a resistance line. On the flip side, the 135.80 provided resistance here and support here. Both seem to be valid. So the base scenario, given that the upward trend line has been broken and the RSI indicator is correcting lower towards the reading of 50, actually pretty close. It's currently at 51.9, almost 52. We tend to maintain a bias for a sideways motion between the 137.50 and the 135.80, something like this. On the other hand, should the US dollar gain and start rising once again, then we may see also the USD JPY being on the rise, breaking the 137.50 and start aiming for the 139.65. Should the bears take over, We may see USD JPY breaking the 135.80 and start testing the 133.90. Definitely a break below the S1 would be required for bearish outlook. But my best guess is that the pair could go as low as the 133.90. Note how it provided support there. It was beautiful. While on the flip side, the R2 is being placed as the second resistance line exactly because of this peak here and this peak here. But also, and we have to mention it here, it provided support here, commotion here, support here. So it's a pretty valid level as well. Once again, main scenario for now, given also the RSI indicator, which is near the reading of 50, is that the price action is to maintain a sideways motion. Moving now to safe haven currency pair USD CHF. Okay. USD CHF rose, broke above the 0.9395 support line and seems to maintain a sideways motion once again. But I think the interesting part here would be the breaking of the prior upward downward trend line. See, we had a peak, a lower peak, a trough, a lower trough. The interesting part here is that these two peaks are at similar level, these two troughs are at a similar level. So we had a flag here practically. I wouldn't say flag, no. Nevertheless, the main story is that the downward trend line has been broken and the price action has stabilized over the past 16 hours. Also USD driven. The RSI indicator is just above the reading of 50 as well, implying rather decisive market, and that's another indication of the sideways motion scenario. Also note how the Bollinger Bands have converged, have narrowed, implying low volatility. But once again, I would be highlighting the American Open. For the time being though, and should the price action remain between the R1 0.9495 and the S1 0.9395, so that would be something like this, then we would be talking about the continuation of the sideways motion. Should now the bulls take over, which is a possibility, we may see the price action rising, breaking the R1 0.9495, which has proven its worth as a resistance line here, and start aiming for 0.96 resistance level, marking it this peak here. I understand that there is another peak a little bit lower, but in my opinion that was too close to the price action for it to be an actual second resistance line. I think more space is required here, and that's why I picked this peak here. On the flip side, should the bears take over, we may see the price action dropping, breaking the 0.9395 and start aiming for 0.9285. Let's have a look where that support level is actually based. Okay, we had a touch here. Let's have a look at it. That would be around mid-April. Actually, on the 12th of April, we had a nice touch, and practically the level served as the lower boundary of the sideways motion here. While if we go further back, you can see that it was tested again and again and again. It's pretty valid. Yep, I would be keeping it. Okay, let's lock this in. Once again, Main scenario for the time being is the sideways motion to continue, yet the American Open may change the direction of the pair. Should the bulls take over, I would expect the price action to break the R1 and start aiming for the R2. Should the bears take over, we may expect the pair to break the S1 and start aiming for the S2. Commodity currency pair AUD-USD. I think it's time that we made some changes here. You can see that the price action broke to the downside of the triangle and was intense. Beautiful reversal. Let's correct the first support line as it has now turned into resistance level. Let's go hunting for a new resistance level, and that support level, that would be, I would choose this through here and here. Could be lower though. Let's have a look. Also have nice touches here. Some commotion. Test to the upside, test to the upside. Commotion. Seems to be valid as well. Could go even lower. Beautiful throw with a beautiful reversal. Touches. Testing. Touch. Touch. I'm keeping this. I know it's a little bit wide, but to tell you the truth, I think it's a pretty valid level here. We should not neglect it. 0.6310. Oh, that was my bad. Sorry for you. 0.6385. Yeah. Okay. Let's make the corrections also in the chart with the labels. The R3 is now being placed at 0.7040. The R2 is being placed at 0.6915. The R1 is being placed at 0.6795. Expect also the support levels. 0.6640, 0.6545, 0.6385, okay. For the time being, we tend to maintain a bias for sideways motion, albeit obviously the sideways motion here is very, very narrow in comparison to the levels we have set. But I think this low volatility is only temporary, so I'm keeping the levels. Now we have an interesting element here, and the interesting element is that despite an initial convergence of the Bollinger Bands, we can see that the Bollinger Bands are now diverging once again. Some slightly increased volatility here. Also note that the RSI indicator is pretty low. It's actually at 42, which may imply that there is still a residue of bearish sentiment left in the market for AUD-USD. in which case we may see the pair actually, should the bears actually take over, we may see the price action of AUD/USD dropping, breaking the 0.6640 and start aiming for 0.6545. On the flip side, should the bulls take over, I would expect the price action to rise, break the 0.6795 and start aiming for 0.6915. I would like to see here the market reaction at the time of the release of RBA's interest rate decision. To do that, I'm switching to the 1 minute chart. Let's widen it. And let's attach it practically. This was it. Let me draw it. It was this candlestick here. The price action of AUD/USD rose by how much? Sorry. By 16 pips. Okay, it's not much, but still it's something. And it's interesting that despite the correction here, 2 minutes later, the price action continued to rise. So there was some bullish market reaction here. Nice. Leave this, drilling out to the 4 chart once again. And small repetition. For the time being, our bias remains in favor of a sideways movement. Yet should the bears take over, we may see the price action dropping, breaking the S1 and start aiming for the S2. And I'm noting the bearish possibility because we have an RSI indicator which is somewhat low. But I have to note here that it remains quite close to the reading of 50. It's nearer to 50 rather than to 30. So yes, there are some bearish tendencies, however, I would take that with a pinch of salt. Let's have a look at the other commodity currency pair that will be USD CAD. Oh, here we have a rise. A nice clear-cut rise, no stabilization. That was interesting as we can see that the Canadian dollar is diverging its market reaction. Let's drill to the 1 hour chart for more accuracy. Okay, now we get a different picture. At this picture, the upward trend line I have drawn is not valid. There was an upward motion, a steep upward motion, a stabilization during the late American and today's Asian session. Let's put the needle thread as well. Yep. You can see that during today's European session, the pair has restarted to rise. And this rise, this rise was partially, if not fully, USD related. But this one is CAD related. On the other hand, note how the price action, the Bollinger Bands have converged. I think the bulls got it here. Let's correct the supports and resistance lines. Back to the 4 hour chart. This turns to a resistance support line. $1.3470. This turns into a support line. 1.3570. Let's go hunting for new resistance levels. I will be placing one here. It's a peak. We have multiple testers. Seems pretty valid. Let's fix it. That would be the red 1.3805 resistance line. The third, I'll be placing it here. That would be the 1.3975 red resistance line. Let's widen this. It's an interesting chart. There seems to be a wide sideways motion, but I think that's more clear if we drill out to the daily chart. Nah, no. Okay, there's an upward motion in the daily chart, which supports the rise here. Okay, let's correct the labels. Sorry about that. S3 is now being placed at 1.30 to 30. Sorry, 1.3320. S2 being placed at 1.3470. S1 at 1.3570. And the R1 at 1.3685. R2 is being placed at, let's have a look again, 1.3805. And the R3 at 1.3975. Okay. So the upward motion is still present. And it's interesting to note here that the RSI indicator is touching the reading of 70. Once again implying on the one hand a bullish sentiment, a clear-cut bullish sentiment for the pair. On the flip side though, may also imply that the pair is approaching all the board levels and may correct a little bit lower. It's interesting to note also that the price action has reached the upper Bollinger Band, which once again tends to imply that the bulls may slow down somewhat. Nevertheless, should the bulls maintain control, I would expect the price action to rise, break the R1 1.3685, and start aiming for 1.3805. On the flip side, should the bears regain control over the pair, we may see the price action dropping, breaking the 1.3570. That would be a prerequisite for a bearish outlook. and the price action starts aiming for the 1.3470. Finally, for sideways motion, I would expect the price action to remain between the R1 and the S1 in a nice sideways motion. Yet, in my opinion, the rise of USD CAD may be also attributed to a weakening of the Canadian dollar. And that comes from a weakening of oil prices. Let's have a look at WTI. There you are. WTI's 4-hour chart. A steep drop yesterday. And the price action has renewed its bearish tendencies during today's European session. Okay. Let's make necessary corrections first. Definitely this turns into a resistance line, the 79 level. This is going to be used to find us a new ultimate support line. Seems good at here. Nice touches to the downside, nice touches to the upside. Keep it up. And that would be the green 69.25. Readjusting the chart. Let's correct the labels. Higher resistance line now being placed at 87. Second resistance line being placed at 83.50. But in my opinion, for the time being, they seem to be irrelevant. But still, first resistance line is considered to be at 79. First support line being placed at 75.4. Second support line at 72.55. And final support line being placed at 69.25. Okay. Seems good. So, for the time being, we tend to maintain our bearish outlook for WTI, given also the renewal of the bearish movement during today's European session. Our downward trend line can't be formed. Making a start here. It's a little bit steep, a little bit fresh, but still present. We had a confirmation by the correction here. So as long as the price action remains below the downward trend line, we maintain our bias for a bearish outlook. Also note that the RSI indicator is aiming, it's pretty low, it has not reached the reading of 30, but it's pretty low and it's aiming for it. So that's another indication for bearish sentiment. On the flip side, note how the price action has just broken below the Bollinger Band, which may slow down the bears somewhat. But should the bears maintain control, we may see the price action dropping further, breaking the 75.40 and start aiming for the 72.55. On the flip side, a stabilization of WTI would be required, would be more evident should the price action respect on the one hand the S1, break the downward trend line, and remain between the R1 and the S1. A bullish outlook, however improbable that may seem, it's still a possibility and should be covered, in which case we may see the commodity's price reversing direction, breaking the downward trend line. I would require also a clear break of the R179 resistance line in order for a bullish scenario to start forming and the price action to start aiming for the 83.50. Once again, the bullish scenario for the time being is the least probable, but it's still there. That should sum it up from all of us here at IronFX. Best wishes for solid trading.
Hello and welcome to another educational video. As part of our technical analysis series, we would like to look at trend lines. A trend line helps technical analysts determine where market prices are heading. A trader using technical analysis will utilize trend lines to identify and confirm market price trends. This is based on the idea that price trends. The trend line is nothing more than a straight line drawn between at least 2 or more points. An uptrend line has a positive slope and it's formed by connected 2 or more low points. In order to have a positive slope, the second low must be higher than the first. Uptrend lines act as support and point out the net demand it's increasing as the price rises. An increasing price combined with increasing demand is very bullish and shows that buyers are determined to buy. If prices remain above the trend line, the uptrend is considered solid. A break below the uptrend line suggests that net demand has diminished and a change in trend could be looming. A downtrend line has a negative slope and is created by connecting 2 or more high points. The second high must be lower than the first for the line to have negative slope. To confirm that the trend line is valid, at least 3 points must be connected. Downtrend lines act as resistance and demonstrate the net supply is increasing as the price drops. A falling price combined with increasing supply is very bearish and shows that sellers are determined to sell. If prices remain below the downtrend line, the downtrend is considered solid. A break above the downtrend line indicates that net supply is falling and that a change of trend could be looming. The trend line becomes more important and more credible as the number of price extremes that can be connected by a single line increases. The validity of a line that connects only to price extreme is questionable. Most often traders can take profits too early. It is best to stay with the trend until it breaks, avoiding the desire to sell too soon because the profit could be higher than originally anticipated. Thank you for watching.
Hello, hey guys, hi. Hey. Hi Arun, hi Juha. Hey, hello Namdi, hello Ronald, hello Stephen, and hi to the rest. Hey, thank you very much for joining today on another IronFX webinar series. Hey, give it a moment for the others to join before we begin this webinar. Okay, give it a moment. Okay. Okay, let us begin. Okay, welcome. There are more people joining. Thank you very much. Hey, let me know where you guys are tuning in from. Where are you guys from? Well, for me, I'm from Singapore. It's around, okay, it's 6 p.m. right now. 6 p.m. Oh, Nigeria, Finland, UK. Very, very nice. Wow, all over the world. Belgium. Wow, all these places. I got to go there one day. Okay, nice, nice. Let us begin. Okay, today will be very, very technical. Very, very technical on the multiple pivot point strategies. There are quite a few that I would like to share with you. So let us begin. Okay, as usual with the introduction, my name is Chen Yongjing, and I am the investment analyst for Everest Fortune Group. So we are also the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. Okay, a disclaimer first, all trading involves risk. It is possible to lose all of your capital. And the agenda for today. What are pivot points? The different types of pivot points, and what time frame should you use for pivot points? Also, we will be teaching how to add them into your strategy. So later I can ask you guys what kind of strategy you guys use, then I can see what kind of ways we can implement it into your strategy. Okay, my hair is a bit messy. Do apologize for that. Okay, what are pivot points? Okay, a pivot point is like, let's say the chart, up, down, down. So where are the pivot points? A very, very simple pivot point is the top and the bottom of the low and the high. So you can call it as the previous high or the previous low. Okay, a pivot point is an intraday technical indicator used to identify trends and reversals mainly in equities, commodities, and the Forex markets. So all these reversals, what I like to do, I personally use something very similar to pivots. So with this, the high and the low, I like to catch that reversal back in. But of course, with some confirmation. So maybe later I can share on how I do that. Okay, pivot points are also calculated to determine levels in which the sentiment of the market could change from bullish to bearish, vice versa. Okay, the high, just take note, the high, it indicates the highest price from the prior trading day. Hey, I see more of you guys sleeping in. Hi, April. Hi, Ayman. Hello, welcome to the webinar. Okay, as I was saying, the high, hey, hello. Hi, man. Okay, as I was saying, the high indicates the highest price from the prior trading day. The low indicates the lowest price from the prior trading day. Okay, the day traders calculate pivot points to determine levels of entry, stops, and profit taking. Later, I'll be turning on trading view. So I'll show you guys the pivots are the multiple pivots. I think I'll be presenting for today. Hey, good to be here. Yes. Lucky you are here. Welcome. Annie Chukwa Kingsley. Okay, I'll be presenting today 4 different types of pivot points. The standard ones, which are the most basic ones, the Camarilla pivot points, which I think I like it. I like this pivot quite a lot. and the Fibonacci pivot points, and the Woody's pivot points. So all these are just improved versions of pivot points. So the first pivot point, this one, the Camarilla pivot points. Okay, it's actually refined form of existing classic pivot points formula, developed by Nick Stott, and it's a better use of Fibonacci numbers in the calculations of levels. It's also used to calculate intraday support and resistance levels. Okay, let me open it up. Let me open the charts before we begin. Okay, just to let you guys know, also we have an IronFX YouTube channel where you can watch the live TV and the past playlist. You can take a look. You can learn quite a lot of things right here on the IronFX YouTube channel. I'll just paste it over into the chat to everyone. Okay. Okay, we start with the traditional pivots first. Okay, traditional pivots it looks very confusing. There are multiple resistance 2, 1, 1, 2, 3, 4, 5. Support 1, 2, 3, 4, 5. So it's in a way, it's very, very similar to how a Fibonacci works. So if you take a look, if I turn it off, how a Fibonacci works, can from the top all the way there. So it looks very similar. If I turn it on, you see some lines coinciding, especially this area. So it's in a way you can actually trade similarly to how you use a Fibonacci from one area to another area. Okay, this is just the traditional one. You can actually find it in the indicators under pivots. So you can actually get the pivots point standard. Okay, what was the one that I was going to present is the Camarilla pivot points. Okay, let me move the screen a bit so I can see everybody. Oh, more people are joining. Hey, welcome, man. Welcome, Hanin. I just saw you sleeping in. Okay, so we are on this. Okay, so for resistance, for these pivot points, for this pivot, the karma, let me type it out. Okay, excuse my pronunciation. Karma Villa pivots points. Okay, so with this, we have the supports 1, support 2, supports 1, support 2, support 3, support 4. Okay, you said that the email said start time was 10 AM GMT. Yes, it's right now it's 10 AM GMT. It's 6 PM. Well, for my timing, it's 6 PM GMT plus 8. So it's slightly different. No, it's 11 AM. I think, can you please, Stephen, can you please say what you meant against? I think I'm a bit confused at your statement. Okay, it's at Mr. Camarilla pivot point. Okay, so we also have the resistance 1, resistance 2, 3, and 4. So what I like about this is I actually noticed that you can actually backtest with backtest. You can buy from the resistance. You can buy from the support and with the stop loss below. So example like this. Okay, now is 11 AM. Email said it will start at 10 AM. Okay. I'm not sure about that. I think it might have been the IronFX email site issue. GMT timing, just let me clear this up. Now it's 11 a.m. GM email said it will start at 10 a.m. Well, I think it's the GMT plus 0. Do you mean that, Stephen? Okay, give me a moment. Okay, let us continue. I think I'll get back to you regarding that again later on. Okay, so yesterday I was actually in a EU shorts. Oh, you are in summertime. Okay. I think I'm a bit confused on the timing too. Later I'll check it out. Okay, so what do we have? Give me a moment. Okay, so we have this area. You can see this area. This is the support 2. It bounced up and it actually coincides with an area where I was actually trading yesterday. So I was actually in a short. I was in a short over here, somewhere here, with my take profits 1 here and take profit 2 at this candle right here. But my final take profit didn't got hit. Well, it's fine. Later I'll explain this trade out also. So I actually like this pivot point a lot, this Camarilla pivot point. So you can see on as soon as the what do you call it, the supports for, this is the supports for the previous day, or the resistance for that it gets broken, you normally trade with the trend. So when price goes below it, they continue selling downwards or upwards. So this one, it's the support for that is broken. Let me make it smaller a bit. Okay, let's take a look at old data for some back testing. So you can see here, resistance 4 broken, price continues going upwards. So I'm sure you guys are thinking right now, why not I set a buy stop here, a buy stop with my stop loss at the bottom, or maybe here at resistance 3 for price to continue going upwards. Isn't it possible? Please, audio echoing. Okay, let me test the mic. Hi, mic test. I think someone is having issues. Can you hear me clearly? Can you guys hear me clearly? Where will this recording be uploaded? Not here, all clear, no audio issue. Okay, this audio recording, they might upload to the IronFX YouTube channel. They might. So I remembered I saw my, let me take a look. Okay, all clear. So I think for you, for audio Kyun, it might be your speaker issue, or you might want to use a earpiece regarding this echoing issue that you might have. So they okay, no problem. Hey, thank you. Okay, nice. Let us continue. Okay, so they might actually upload it on YouTube. I saw my previous live trading analysis was uploaded online too. So it might take a few days. Give them some time to upload. So let me clear these things out. Okay. So some of you guys are thinking probably I can set a short position right here. Upon breaking the support 4, my stop loss, to be safe, I can set it at the supports 1 and let price continue downwards with, at least as usual, a minimum of 1-to-1 risk to reward. Minimum 1-to-1. Never go lower than that. You will be, especially 0.8, all this, just ignore. Do not take a trade. So we can see, let us see by the end of this session where price on the euro dollar might be heading to, since it has already broken the supports for pivots. So for this, right, coming back here, just now the back test, to have a safe, very safe one, we have our stop loss at the first resistance, the red line. Wow, even more people are joining. Wow, we have quite a lot of people today. Okay, let us move on here too. Okay, this is a scenario that it did not work out well. So you're taking a shot. You're taking a shot. Let's say you take a shot here, a stop shot. Okay, it's not here. Okay, it's here. This scenario did not work out. So with your stop loss there, and then the maximum it even went was in a negative risk to reward before price reversed all the way up. So you cannot just trade solely based on one indicator, especially the pivot indicator. It's best to combine multiple forms of indicators or your own trading methods before you enter a trade. This is a very good example of a beginner mistake. If you actually enter it right here, and then it just hits your stop loss, although you have a fairly wide stop loss. So let's continue. Okay, another area is here. Price goes up, maximum it did when, okay, at least nice, it was a 1-to-1 right here, at least. So always, I have a question, do you use the automatic trading? Answer live. Okay, you were asking you want to do this automatic trading. You want to use this automatic trading. No, I actually don't use automatic trading. I use something called, this is my personal trading method, Smart Money Concepts. Just send it out into chats. So I usually use that, Hanin. I use Smart Money Concepts as a confirmation together with market imbalance. I stress that a lot, especially the amount of risk that I'm using. I only risk 1% per trade. So I don't go for those 5% trades where after, so let's say you risk 5% per trade. It takes you 20 losing trades to actually blow your entire account. With 1%, it gives me more time to cover back if I'm in a loss. And it actually takes 100 trades before you blow your account. So if you actually blow your account risking 1%, I think you need to rethink your decision on trading or to just take a step back and start to study more. Okay, I'm not seeing, okay, nice. Okay, here is another example of how it didn't work out. I'm just showing you guys things that don't work out and how it works out, just in case you guys decide to just do a stop, just follow using the indicator and then it hits your stop loss. So this is another scenario where it didn't work out. Always look to the left of the charts, especially here. Do you have a robot? No, I do not use a robot. I don't trade using a robot. I trade using a naked chart, actually. A naked chart. So what do I mean by a naked chart? I do not use any indicators when I am trading. Later, I will open up my personal chart layout. You can see. So I actually have my personal chart layout right here, where I'll show you later. There's 0 indicators involved. Okay, moving up. So you can actually see the win rate just following this. Camarilla pivot point is not that accurate. People can actually reverse price actually for this scenario, price reverse. This scenario, price reverse. For this, price went kind of right before it's reversed. Okay, this is another scenario. It didn't work out. The overall trend is bearish. But then this area broke. You try to short. Yeah, you try to short. Okay, work quite well. This is working well. The stop loss there. It's very wide. You get a 1-to-1, but it took quite long. I don't like holding trades for a long period of time. So how long did it take to even hit a 1-to-1? Wow, this is a very, very long trade if you're actually in it. Wow, it took 3 days, 13 hours just by using a sell stop, man. That's very, very long. Same thing with this. Wow. It took very, very long for a 1-to-1 trade. Okay, just in summary, don't just use a sell stop. Use some kind of confirmation before you enter, and also to minimize your risk to reward. Okay, this took 1 day, 2 hours. It's quite long, man. Okay, let's move on to the others. Let's move on to the other. Let's carry on with the presentation. Okay. Next, we have the Fibonacci. Okay, there's one more person with a question. Do you have a group to do smart money concepts together? Let me answer this live. Okay, do you have a group to do the smart money concepts together? Unfortunately, no. Actually, I don't. I learn it online, and then I have friends in real life who I actually discuss smart money concepts with, and then he's actually better than me at smart money concepts at the time of my learning. So I guess it's working pretty well. The concepts are pretty okay to understand, pretty easy to understand for me compared to other methods. What method do you use, Hanin? What method do you use for trading? Hey guys, just send into the chat what methods do you use for trading. I'm quite interested since we have quite a lot of people. The diversity of trading methods should be a lot. Regardless whether you guys are new to trading or price action. Akuma, you use price action. So do you trade like, do you know who is Raja Banks? Do you trade like him? Okay, next we have the Fibonacci pivot points. It incorporates the Fibonacci levels into their calculations. Is pretty much accurate, and they find the support and resistance levels. Okay, so the calculation is quite complicated. So I actually wanted to add it into the slide, but then it's already in an indicator, it's automated. So you guys do not actually have to know how this entire, all the pivot points that I was covering, how it's calculated. It's fine, it's not needed. Okay, I think somebody is asking another question. Okay, Hanin, you are asking about money management. What do you mean about money management? Do you mean risk management? Do share it into the chat. I can help to answer your question regarding that. Okay, risk management. I'll just do a quick one. So hopefully the others can benefit on that too. So let me clear this out. Let me take an eraser to clear this out. Is it not clearing? Forget it. Okay, so I risk 1% of my accounts. I only risk 1%. So let's put it into very, very simple terms. Extremely, extremely simple. So I have $100 in my account. Okay, maybe 1,000. So per trade, I only risk 1% of 1,000 times 1%. So every time I lose, let's say I lose the trade, hit my stop loss, I only lose $10. But if I have a risk to reward of 2 to 1, I'll get 2%, which is equals to $20 profits. So how do you calculate your lot size? How do I calculate the lot size for the 1%? So let's say I'll just draw it out. This is how a trading view looks like. So we have the stop loss level, the SL, the take profit area. So the SL, let's say we have a stop loss of 9 pips. 9 pips. But then including commission plus commission is equals to 10 pips. So we just take our $10 divided $10 divided by 10 is equals to 1. And then you take your 1 and divide by 10. So you get your lot size. So your risk amount divided by the pips you are risking and then divide by 10 one more time. This is just a manual calculation. Okay, let's move on to the Fibonacci one, the Fibonacci thing that we are talking about. So have I answered your question, Hanin? Okay, the pivot points levels are determined by calculating the pivot in the standard method. We have the calculation method is pretty complicated. I'll not get right into it. Okay, and why people like to use Fibonacci is because many traders use the Fibonacci ratios. They use it for retracements and as a place of where they would like to close their trade or take profit at Fibonacci levels. So I also like to use Fibonacci to determine to add confluence. Confluence, let me write it out in case my pronunciation is not that good. So to add confluence to my trade, I like to use Fibonacci. So I also look to the left of the chart, left to the chart, as in there must always be a reason on why there is a take profit area. Okay, okay, I'm not sure how to pronounce your name. I do apologize for that. Okay, you say you are a beginner. So I don't understand anything in day trading. Is this course okay for me or should I skip this course? Do stay around to listen. I can actually show you some methods where you can increase your chance of to have a better chance of a winning trade. I'll just simplify it down. Later I'll show maybe some form of smart money concepts, a very, very simple one later on. How I take it and I only take that kind of trade. Okay, next we have the Woody's pivot points. So it has a greater weighting on recent price data, very similar to the EMA, and it's used for intraday trading. So for Woody's pivot points, they are made up of multiple key levels calculated from past points. The key levels include the pivot point itself and multiple supports and resistance levels. So traders actually use these levels as a guide for future price movements when setting up trades. The calculation for the Woody pivot points differs from other pivots because it places a greater weighting on recent price data than the other variations. Okay, it's also widely believed that the high and low prices are a result of emotions in the heat of the battle, while the opening and closing prices are a more accurate representation of the mood of the markets. Okay, let's move on. I can open the chart again to present the Woody's pivot points. Okay, I think it might be this. Okay, we have my screen has all these lines. How do I remove it? Can you guys actually see the blue lines on the screen? Can you guys see it or is it only me? Do let me know all these blue lines that I'm actually looking at. There are some lines on the screen. You guys see all these lines right here? Oh, damn. Okay. I think it might be something to do with the drawings. Oh, wow. Okay, I found it. Oh yes, nice. Okay, found a way to clear it. Hey, thank you for confirming that. Okay, for Woody's pivot lines, just like the PowerPoints. Okay, they like to sell. Where are they selling? They're selling at the first resistance downwards, or they long it from the second support or the first support. My personal thoughts about all this, about entering like that, just by entering, oh, I have a buy limit set here, buy limit set here, stop loss below, buy limit. The thing is, I take it as it's some kind of gambling. I'll take it as this gambling, because if you just set your buy stop or your sell limit just at this level, along this level, waiting for price to go down, you are not adding confluence. What you want is multiple confluences to the left side of the charts, or multiple like confirmations that this trade might go in your direction, instead of just setting a buy limit, sell limit. I wouldn't do that. Okay, Woody's pivot points. Get to the chart. Okay, let's take a look. Since Woody's pivot points are for the intraday traders. Okay, no issue, continue class. Okay, sure. Okay, you can take a look right here. So, you have a short position, stop loss at the second resistance. This is using the Woody's. I'll just write out Woody's points. Make it larger a bit. Okay, maybe 20. It's too small. 40. Okay, Woody pivot points as usual. 1-to-1 risk to reward. So you're just trading zone to zone, just like a Fibonacci. Zone to zone. The first support and the first resistance. Also, later I'll show you guys how I enter using smart money concepts, a possible way that we can implement it together. Or if you guys have any methods that you guys are currently using and that I might know, do send it over in chats. I might try to implement it in. So same thing here. People try to long. Let's say you long it here. Your stop loss must be a considerable area. It's up to you where you want to set. So if you set it right here, your stop loss hits. But let's say in a scenario where you set your stop loss lower, can you show how to calculate the pivot points? We are actually using an indicator. I'm not calculating the pivot points, so you can actually search it up. The indicator that I currently use is by Chris Waters. And it's under indicators. We do not calculate the pivot points ourselves. If you like to know the calculation, I actually want to add it to chart, added it to the PowerPoints, but I thought about it. I think it's too technical and it's something that majority of people won't be using. They won't be calculating. They'll just see it and they will forget about it. Since it's already in an indicator, so I guess the calculation is not needed. Okay, but thank you for asking, Ronel Ramos. Okay, so the indicator that I currently am using is pivot points by Chris Waters. So this indicator is actually quite good because in the settings, we can show the floor pivots. This pivot I'm not presenting. So we are showing the Woody pivots, the Fibonacci pivots, and the Camarilla pivots. So it's like an all-in-one indicator. So same thing with let's say in a situation where our stop loss wasn't hit. Let's say we set it right here, stop loss right here. In such a situation, we still want a 1-to-1 risk to reward. Okay, this was pretty good to the next resistance, 1.16. By something I would not like to do. I don't like, as usual, I like to say I don't like to hold my trades for. This took 6 hours. I normally like to hold my trade for maybe around 2 hours, 2 to 3 hours, and I'm out. If not within the hour would be best. Okay. Let me show you guys. Do you guys want to know there are formulas for all styles online. Yes, there are many. It's all online, but I'm sure nobody is calculating this by hand, right? Like you wake up in the morning, you decide to calculate the pivot points, start to use all the calculations. So you can actually search online, Kamavira pivot point calculation. So you can see the calculation is so complex. There's so many calculations to do just on that. I don't think anybody will be just calculating, will wake up in the morning, open their chart and calculate, right? You'll be looking at multiple currencies. That's why the indicators are there to automate it. So by the time you calculate all this finish, maybe it takes you 15 minutes to half an hour. By then, you would have wasted your time because I'm sure a few people are looking at maybe 4-6 currencies. So to calculate all this out manually by hand, it will take 2-3 hours. Please don't do that. Just use the indicator. It will save so much of your time. Just open, close, open, close. It's very fast. So do you guys want to see how I enter a trade? So yesterday, I actually took a shot right here. I took a shot right here. Okay, it's not showing in the, cannot show an example. Maybe I can show a reversal. Okay, let's say I actually took a reversal trade that hit my break even. So let us zoom in on the 5 minutes. What actually happened? So if you guys are actually using smart money concepts, it's actually very, very similar to how a pivot is used, how a pivot is presented. Okay, now we are already in the final parts of adding the pivots into the strategy. So for my personal one, I like to use smart money concepts. So I like to add it in. I like to add this into my trading style. So just now I was saying the high and the lows. So the low and the high, you can see this area, hit, tapped, reverse. This area, tapped and reversed. So yesterday, I actually entered a long. I wouldn't lie to you guys, I entered a long right here. I was hoping for price to continue going up to clear this high. Why did I enter that? What was my confirmation? So I took this area, which is the low of the pivot. So I'll set it as the sell side liquidity. So I saw that area got cleared and price went up even higher. I expected. This is the buy side liquidity, the high side. I'll turn off this first for now. Okay. So when price on the M15 charts, it cleared this high, this small little high right here, using smart money concepts. So I like to call this break of market structure. BMS is called break of market structure. Okay, so moving into the 5 minutes. So I actually use 15 minutes to get the overall grasp, the overall picture of the market, what is going on in the market. So moving on to the 5 minutes, charts. So this was the 15-minute high that was broken. Price went up even higher. I tried to implement my personal trading methods. And then what did I spot? I spotted on the 15-minute charts, market imbalance. So you can see this area right here, this area. Price previously did not come into that area. So I was looking for price to come down, tap that area before price continue going upwards to clear this high right here. But I did enter. I enter right here. I entered there. So let me draw out this area. I entered there. Where's my wrong? With my stop loss at the bottom. And I was looking to the top. So actually to the left, there was something. I already cleared the chart. So all the way to the left side of the chart, there was a point of interest that I was aiming even higher than this specific area. So even for me, I do have my wrongs when I'm trading. It's okay to have wrong as long as you guys have a trading journal, you record it down. So the moment price came down, wow, I was looking at it yesterday. Price continued coming down. I know most of you guys, a lot of beginner traders, not you guys, a lot of beginner traders, when price start to go this low, or you start to close out your trade, then only for price to go back up, and then you will be thinking, damn, I could have held on to my trade and I wouldn't have lost money. So the moment price broke this area, broke that area, that low right there, cannot get the thing out. So the moment price broke that area, I set that area as the ideal invalidation level. What do I mean by ideal invalidation? To me, this area is no longer valid. The trade is no longer valid already. So I believe that if price broke this area, I was expecting price to possibly, I was just hoping possibly come back up before it continue going downwards to hit my full stop loss. So this is how I manage my trade. Not only do I have a stop loss right here, a take profits, an entry, I also have ideal invalidation. So you must know when your trade is not going right. You don't just hold your trade and you tell yourself, yes, price is continue going up. You see, it continue going up. And then in the end, it still went down and hit my stop loss. So I have an ideal invalidation level. So once I had two accounts. So one of my accounts, I set it to break even. My live trading account, price went up. I set to break even the moment price hit this ideal invalidation level. And thankfully, since we cannot control the markets, price could have just continued going downwards, hit my full stop loss. I set my trade to break even. What do I mean by break even? So I was just hoping possibly for price to come back up, and price did, came back up to my entry and closed at break even. For the other accounts, I have two accounts. For my other accounts, so I'm actually doing a challenge, a trading challenge. So on the other accounts, I actually cut off half of my risk. I closed off half of my trade right here and I let it run. So in the morning when I came to office, I took a look. Wow, price actually almost hit my stop loss, but it continued going up. So somewhere around here, I closed somewhere around here. So my take profit isn't that much. In the end, it was like something like this. It was pretty bad. It was only up around 9 pips and I just closed it out. I was busy with work, so I couldn't manage it. So I closed it. And thankfully, thank God I closed it. Price continued going downwards. And then it also cleared my stop loss. So this is just an example of how I manage my trade using smart money concepts and ideal invalidation level. It's very important to have that. A lot of people actually don't, when they teach online, they don't tell you anything about ideal invalidation. They just tell you to let the stop loss do its thing. But obviously, you still got to manage your trade when it isn't in your favor. Price is not going in your favor, especially in my favor last night. So can move on to another trade, a possible trade. Smart money concepts. So we have this level. Let me take a look back. Just want to share with you guys one trade that I took. Okay, this is the one I remember. Last week I took this trade. So I took this trade right here, but I actually closed here. I did not close it at here. If I say I close it here, I'm lying right to the chat. So why did I close it here? Why did I close the trade there? So if you guys look to the left, there is what do I see? I always like to talk about the market imbalance level. And same thing, I will be implementing what we are teaching today, the pivot points. So we have the high, the low, the high, the low, pivot points. So I set this as, that day I was looking at this area. So this area right here, it's the 15 minutes market imbalance area. So I mark it out. What do I mean by market imbalance area? See, if you zoom closer, this area, price previously has not come into. So I'll set it as the red area for a possible reversal. So when I was looking, what I also like to do is, there's something that's why I don't use indicators. I'm just showing you guys plain how I look at a naked chart. You can see all my indicators right here are closed. How did I answer? I like to mark out the Asian range. So the Asian range goes from, let me check the timing. Okay, I'm using the New York UTC -4 timing. So I'd like to do is the New York time, the Asian timing, it's from 1900 hours, 19 o'clock. So I like to mark it out until 12 midnight New York time. You can see at the bottom, it's 000 hours. So I like to mark it out very clean. My chart is just like that every single day. So I mark it out black, mark it out as the Asian range. Top, center. So how did I know that price was going to go up? How did I know that? So we go on to the daily before that, to the daily chart. Let me get this out. What day was this? 13 October. So I actually took the previous day high. It was here. And the previous day low. Let me get back into the 15-minute charts. To apologize for that. Okay. So we got it right here. The trade happened on a Thursday. So this was the previous day, Wednesday, high and low on the daily chart. So just put that into perspective. Previous daily high. See, I like to mark it out. It's just like that. I don't use any indicators. Previous daily low. So PDH, previous daily high. PDL, previous daily low. So I just do it like that. And then I wait for the London session to start. So between the timing of over here, from this area to 2 o'clock, I do not touch until London session starts at 2 a.m. New York time. So I do not touch until it's 2 a.m. onwards. So what do we have here? Price, what did price clear? Price cleared the Asian low. So I like to wait for the Asian session to be cleared, either the high side or the low side. So marking this out, we can say the Asian low got cleared, Asian low plus sell side liquidity. So this area got cleared. What do I mean by sell side liquidity? So in smart money concepts, we have this area. Look at this, multiple wicks. So many wicks to be cleared. So price cleared all of those together with the Asian low. And I was waiting for price to reverse. So price continue going up and it cleared this high. Take a look, it cleared this high right here. So I already marked it out. Break of market structure. Let's move on. So I waited for the 15 minutes to close before I start to look for an entry. So on the 5 minutes charts, since price already broke here, same thing, I like to enter by the market's imbalance. So on the M5, look at this very, very minute area. Very minute area. Let me make it straight. So you look at this minute area right here. Very, very tiny. Let me zoom in all the way. You can see previously, price has not tapped into this area. So I set a buy stop here. You can see price actually tapped into it. Very, very tiny. Price tapped into that area. And then I set my stop loss at the very bottom. Why do I set my stop loss at the very bottom? Because there is another market imbalance right here where price could potentially come down to before it goes up. So I set it as that with my take profits up to the M15 market imbalance, and I just close it right there. This is the M15 market imbalance. You can actually see this, the high is the previous day high and the previous day lows. It's also a pivot point, a pivot high and the pivots low. So in a way, I'm actually also implementing pivots into my trading, just that I draw it out manually. Okay, and then it became a 1 to 2.42 risk to reward trade. Okay, do you guys have any further questions regarding this trade? Do let me know in chat. Do let me know whether you guys are interested to learn more about these smart money concepts. Maybe I can ask IronFX. Maybe we can have a session about it in the future. I can share more about it. Any questions, do let me know. This is how I actually refine my trade without using any indicators. Okay, yes, it would be great. Very nice. Any validity in the marks pivot? Oh, I'm not presenting that today, unfortunately. I do apologize for that. We are interested in SMC. Yes, SMC is very nice because there are no indicators involved. It's just a plain chart. I'm just using a plain chart without any indicators. Explain more about SMC. Yes, I like that attitude, that learning attitude. That's how I felt when I first saw about smart money and Wyckoff. Let me open this up. So for smart money concepts, it's actually quite, so you can actually have a better understanding, I would say a better understanding in smart money concepts if you read up on Wyckoff. Read up on Wyckoff. Let me type it out in chat. Read up on Wyckoff too. Yes, the value gaps. The value gaps are taught by Inner Circle Trader. I think I mentioned it in the past webinars that I hosted. So Inner Circle Trader, I'll just credit him. Inner Circle Trader, ICT. He also taught about the fair value gaps, or also known as the market imbalance. So you can already see that I'm implementing. So this area, I took it as accumulation. So what is this? Wyckoff accumulation. That's why I asked you guys to read up on Wyckoff, where there's an accumulation area. So it better explains why on smart money concepts after it clears some liquidity and it continues going up. So for this entry, as what Stephen has mentioned, value gaps, the fair value gaps, I took it from Inner Circle Trader. And same goes to the market imbalance right here, Inner Circle Trader. And this high and low thing is also the pivot points. So you guys notice I actually developed my own, I wouldn't say developed my own. I combined multiple trading strategies before and backtested it first before I implemented it on the live account. Okay, explain more about SMC. You can actually learn more about SMC on YouTube. I'm sure quite a few YouTubers are actually teaching it for free. They don't charge anything. You can learn it for free online. Okay, moving on. You guys can actually screenshot this. So what happened here was there was actually a news. Last week there was a news, so let's not get into that. You guys want to screenshot this trade down? Do screenshot this down. So when you're learning smart money concepts, you can maybe look back on this and kind of understand more in depth on why I actually entered the trade the way that I did. Any more questions, do let me know in chats before we end this session. I'll check with IronFX whether it's possible to hold a smart money concepts session into the future. Read up on Wyckoff. So if you want to know more about Wyckoff, a very, very simple one, you guys can actually check out. Let me show you guys. People, okay, Doge. So you can see this is my personal trading account. I'll send it to chat. That is my personal trading view account. I actually did a short series where I did it on my own at home on the educational series on the Wyckoff accumulation. So it actually kind of explain why. What does it explain? Why price after it clears the sell side liquidity, why price continue heading upwards. So you guys can read this, a short little education thing, Wyckoff accumulation part 1 and Wyckoff accumulation part 2. You guys can follow me if you want. Follow me on TradingView if you want. I've sent it over into chat. Okay. Any more questions? Do let me know. So let me send the link of this also, just in case you guys want. Yeah, I'll probably be writing more. So probably on the pivot points and maybe smart money concepts. So if you guys want to have a short, like a quick summary on what is smart money concepts or pivots, I'll be writing it down on my TradingView accounts very, very soon. So stay tuned. If you want, just follow me. So I got only 11 followers. Oh, someone followed me. Thank you very much. So we increased to 12. Just follow me. I'll be posting more educational series for free. You guys can learn. Hey, thanks. No worries, man. Okay. Any further questions before I end this session? We have a minute left. Any more questions before I end? Okay, thanks. There are no further questions. Hey, thank you very much for following me also and for the support through this. Okay, now we got 13 followers. Very nice. Hey, bye. Hey, thank you very much for joining me today, as usual. My name is Chen Yongjing, and I hope you guys have a good day and take care tonight.
Hello everyone, my name is Emily and welcome to another of our informative videos. In today's video, we'll look at market orders. So what is basically a market order? It's an instruction from a trader to a broker to execute a trade immediately at the best available price. When you place a market order, it means you want to buy or sell a financial asset at whatever the current market price is. For example, whatever price the asset is currently trading at. The market price of a financial asset is currently changing depending on the supply and demand for the specific asset you're looking at. When you place a market order for a currency pair, you cannot specify the price of your trade. For instance, when you place a market order, you will buy or sell the currency pair at whatever the current price is between when you press the buy and sell button and when the trade is executed. A market order is actually the simplest type of order. As long as there is enough liquidity in the market, market orders are usually executed very quickly. With market orders, you do not have any control over the price at which your order is filled. Your market order will be filled at the current price market, which may be significantly worse than the price you can see when placing the order. If you want to trade at or near the current market price, then a market order may be the best option. So when should you use a market order? Market orders are useful in situations where getting your order filled is more important than getting a specific price. This means that you should only use market orders if you're willing to pay a potentially higher price due to slippage. So if you need to buy, sell right away, that's when a market order can be convenient. Thank you so much for watching us, guys.